Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is weekend edition. Today is Saturday, April 25th, 2015. We're going to take a look at the market the way we usually do on the weekend, which means daily, weekly charts, indicators, ETFs, and four financial stocks today: Goldman Sachs, Bank of America, JP Morgan, and Visa. But before we get into all that, just a quick announcement that the second video of my 3-video free training series that's out, it was released this morning. It's called The Forest for the Trees. It really talks about the big picture. And I go into some examples of using Elliott Wave to help with the big picture and for projecting price moves. So I think you'll find that very interesting. And we've got one more. So the free training is just out until, let's see, I guess it's through Wednesday, Thursday next week. So I want you to go ahead and opt in. You can go to the website and go to the training page, or click on the bar at the top of the page and it'll get you there also. All right, let's take a look here at the Dow Industrials. We'll start off. The Dow was up 21 points yesterday. And, again, a little bit of an inside bar. Inside the range of Thursday. We're not really breaking out like the rest of the indices. I'm still keeping this same scenario that I've got here with this ending diagonal type of wedge, because that's the clearest pattern to me that I see. The waves seem to make sense, especially you back it off a little bit. It just looks like it, and it looks like it's kind of broken down and hugging this trend line that it broke down from, right in here. And we'll see. Now, it could all change if we get above this point, like I mentioned, I think it was Thursday night. All right, S&P 500. Now, this has gone, everybody said, well, new all-time high. And yes, it did by less than a point. So it was like a fraction. What is it? 0.69, 17.69, had 17.39 was the previous, so made it by 0.3 of a point. And we're getting divergence in here. We're getting a little bit of short-term divergence on DI+. Look how low the ADX is, and I'm seeing that on several things. So a lot of times when you get an ADX really, really low, it's kind of an indication that a big move is in the works. So we'll see if that's what develops here. We're not seeing divergence here, really. I mean, I wouldn't call that divergence. It looks like it went a little bit higher. So right now, they're continuing to push, the NASDAQ especially. Although this doji type bar and these dotted lines are previous high close, I believe. Might have been intraday, and this might have been a weekly. I think it's probably time to just get rid of that. I mean, we all know we just closed at a new all-time high, and then we went higher here in terms of a close. So the thing that's interesting, when you see the little doji bar like this up near the top of the Keltner channels, looks like right here. Notice how you didn't see any of those in here. You had all these little white bars pushing. When these little doji bars have a tendency to show up, it seems like on the NASDAQ, it means a pause is about to occur or a short-term top. Now, it's not always the case, but it's at least worth, okay, right here. It went to like a 1-week pause before it continued pushing. So I'm not saying this is a sign it's going to top out. Okay, right here above the Keltner channel. And then literally, I mean, if you looked at and said, okay, well, what was the close here? 45.57. Well, I mean, you could have gone all the way sideways for several weeks and rarely been above 45.57. A few days closing above that. And you can see it better if I do this. Okay, so there was a handful of days, but it went basically sideways for several weeks and then rolled over. So we'll see. We're getting up here like this, getting near the top of the Keltner channel, getting a little doji bar. New York Composite, similar thing, a little bit of a pause bar here. It's not inside the body, or I would be a little bit more kind of wondering, like right in here, is that, candlestick harami cross type of thing. But you notice how this does look very similar to here. So again, although the difference between these two, this is right at the Keltner channel, and we're not there yet. So again, it's worth watching. Just noting Russell 2000. This one again seems to be, in this wedge still to me, and we're hugging this line. It's like it tried to break down and hugging the trend line. This deep red line is that long-term trend trend line from 2009. So we just keep pushing up and hugging that trend line. We'll see how far it'll continue to go. Let's look at the indicators real quick. We're still getting divergence. Still getting some divergence showing up with this. So, they can continue to push against the divergence and go on for a while. And then usually, the sign that the weakness is there wins out. So we'll see how long this continues to happen. Let's take a look at the weekly chart again on the Dow. Just some kind of consolidation sideways is what it looks like. We do have divergence on all the indicators. I've shown this before, showed this last week. DI plus, the blue line has not pushed higher, still got the red above. And again, divergence is just showing up. Now, that doesn't mean that all of a sudden it can't push higher. But right now, that's the way it looks. And same thing on the S&P 500. Yeah, but again, this looks like, although we can say it's new all-time highs and all of that, it looks like a lot of sideways action right now. And the NASDAQ on a weekly basis, and again, this is pushing up. Here's these dotted lines again from the all-time highs from 2000, March of 2000, and again, the demand index did not go to a new high with the close this week. Neither did DI plus, and neither did the RSI. New York Composite on a weekly. Okay, so again, a little bit of reinforcing the wedge, and the indicators, we're pushing a little bit higher in here. This is it's not really showing as clear as something like that. So let's see, the last one we'll take a look at on a weekly basis is the Russell 2000. There we go. And again, this is, this made this big move up here on March 20th. And where did it close? 1266.37, and we're at 67. So we're literally 1.2 points higher than where it closed back on March 20th. So, that's 5 weeks ago. So it's basically gone sideways. And the indicators are not pushing higher. At least this one, March 20th. And so that's the way it looks. Just kind of a sideways consolidation. Now we could get another thrust up, or it could start to roll over. But right now, all the moving averages in here are aligned to the high side. All right, let's take a look at our indicators real quick. Short-term trading index, where are you? Here we go. All right, so the 10-day is at 1.068. So we're right in here. No big movement on that. And the VIX is, here we go. So the VIX has gone really, really low, 12.29. So we're getting divergence on the VIX. So this could get interesting. I mean, between here and here for sure, and actually between here, the 16th, and here, it's slightly. This is a higher point. Friday's close is a higher point than here on the 16th. And so we're getting some divergence coming in here, and we're getting pretty low. And what I did was I drew this line right here, right at 12.29, which was the close of the VIX on Friday, and said, okay, well, when have we clustered or gone below 12.29? So now you can clearly see we had 2 days or 3 days in late November, December, before we had a big move in the VIX, which was a big move down in the market. 2 days in September below that point before we had a huge move up. And a cluster of days in late August leading to kind of the rollover into September and up. And a bigger cluster in June and early July, much bigger. So you can see it can go down there and stay down there, but you are getting in that what I would call very, very low zone that is making this susceptible to reversing. Now, this was also the time in June of last year when the put to call ratio on the equities got extremely extreme readings. We have not had anything close to those readings on a 10-day basis since June. Okay, extremely overbought in terms of bullishness that was showing up, which was contrarian signal, a negative contrarian signal, and then look what we ended up getting. You know, the first thrust, pullback, and then the major thrust here. So since that point, we haven't had, you know, big where it stayed below this line very long. And so now this is actually the first close, 12.29, first time since, you know, like I said, late November, December. So what is that? You know, 1, 2, 3, 4, probably about 5 months that we've had a reading as low as we're getting on the VIX. So we need to watch that. And I think the other thing I showed the other night was, you know, when it gets, the ADX starts getting down below 12 in here, how it clustered like that back in late November, December. So the combination of getting some divergence coming in, getting these low readings, etc., we need to be a little bit on alert, okay? And the next one we'll take a look at is the, high-low. Okay, so again, the high-low, you know, the S&P is moving higher, the NASDAQ, everything else. And of course, this is the New York Stock Exchange. But again, not confirming any thrust to the high side like I've been talking about for days now. And the McClellan oscillator, let's go back to the New York and take a look at the McClellan oscillator. It closed at 40.88, so kind of in the neutral zone still. Not extremely overbought, but, you know, we haven't gotten overbought like this in a long time. Even, you know, back December, January, we had these tops right up in here in the 120 range, 115, 120 range. Well, we haven't gotten there yet either. So let's see, the last one, the put to call, I'll mention the 10-day put to call is at 0.63 right now. Okay. So again, you know, it needs to be down below 0.55 as far as I'm concerned for a 10-day extreme reading of bullishness. We're just not there yet. And I don't know if we're going to get there. You know, we may, you know, the peak in that bullishness may have been June of last year, and that may be it that we get. And we'll see. All right, let's move on to the ETFs of the high yield bond fund. Okay, here we go. The HYG, High Yield Bond Fund, up a little bit on Friday, of course, with the market. But again, this has been just going sideways also since, April 7th or so. You know, one big pop in here on the 15th. But other than that, I mean, it's just been sideways action, sideways move. Still get this trend line in. Still thinking this could be some kind of sideways consolidating thing. The next move, I mean, we'll see. Well, is the next move going to be down? It's hard to tell right now, down or up. The next one we'll take a look at is TLT. And it's right where it is, 20-year Treasury bond. Okay, made this move on Wednesday, Thursday, Friday. We bounced back up a little bit. So looks like it's breaking down out of the consolidation, but we'll see whether we get continuation out of it or not. Let's take a look at that on a weekly basis too, just out of curiosity. And you can see a sharp correction, move up. Looks like we're kind of wanting to head that way. This could just be corrective action, and then we resume. I mean, the 21 week still pretty strong up. So that's the way that looks on a weekly basis. All right, let's take a look at the dollar index. And the US dollar index, there we go. Okay, so this one's continued a little bit of a pullback over the last 2 days. and continue that down. It kind of stopped right at the trend line I had drawn in here. Now, on a weekly basis, you can see we're undergoing some kind of sideways consolidation move in here. I do think that this is a strong third wave and that we could still be pulling back down into this fourth wave as part of a corrective mode in here. And let's see, then the next one we're going to look at is 12-month US oil. Hopefully I can find that. There we go. And okay, so this was it up? Just barely, 0.03. So almost unchanged, but continuing to kind of push up a little bit right here at the top of this resistance. And we'll see whether it continues. It looks like it's trying to track and push up. And if we go on a weekly basis, you see this has now been up 1, 2, 3, 4, 5 weeks in a row with oil. Demand index just went positive on a weekly basis. Still got that negative there. RSI just got above 50 on a weekly basis. So it is definitely trying to turn. A little bit, man, I wouldn't even say that's divergence because it's just confirming the sideways action in US oil. Let's take a look at gold. GLD. There we go. Spider Gold shares. Okay, so another down day on Friday. So this move is down. It's like I suspected when I commented even on Thursday after this move back up, giving the moving averages crossing in here. This looks like it's heading back down. I'm going to go ahead and label this right in here as a 2. I now think that we're working a 1, 2, a 3. If that's the case, this is a third minor wave of a third intermediate wave down. Make sure you, okay, so right up here, this is intermediate wave 2. Here's intermediate wave 1 right over here. And so therefore, I think we're going like this. If that's the case, then this move is going to go like this. And it should get much, much stronger because the third wave of all of these sequences is usually the strongest, most powerful wave. Okay, so that's what I'm expecting. We'll see if it continues to do this and pull on down and break this low right now. Okay, let's take a look at our kind of our what I call market sector ETFs, which would be the semiconductors. Oh, wait a minute. I wanted to look at something. Did I show gold on a weekly basis? Let me look at that. Okay, so this is even clearer. I mean, the close on this week is below the range of the last 4 weeks too. Okay, so the whole trading range of the last month, it just closed below that range. So again, just reaffirming the negative thrust that it's undergoing right now. All right, let's take a look at semiconductors, ETFs. And okay, just a little bit of a pullback here. Not sure a whole lot more to read it. You know, this was a little bit of a fake out move. Thought it was going to do this, and actually, this is when I think I got caught on the semiconductor NXPI that I was in, and I got stopped out, and then the doggone thing reversed on me. Well, surprise, surprise. Okay, now we're going to take a look at home builders. Okay, XHB home builders, a big bounce back on Friday. It's kind of interesting. But again, I would say we're, short-term trend, we're trending down. We've broken this trend line here, this multi-month trend line, broken it down. Seem to be we've gotten some support in at this area here. You could almost even make the case that we're in a little bit of a, trading range type thing, going across in here. Now, the hardest part with this thing, so this is the trading range. That's not very good, but I need to grab my stick that lets me draw a line that is straight instead of this free thing. All right, the next one we'll take a look at is biotech, assuming I can find it. There we go. And last Saturday, here was Friday's close. So I was looking at this and said, look, it looks like it's trying to push higher. The trend's still higher, and that's exactly what it did this week. Continued to push up, down a little bit on Friday, but you got to say the trend is right now looks like it's wanting to resume. Not really getting any short-term bearishness in here. A little bit here. I think one out of the three indicators is showing negative divergence. That's not enough to say to give it a negative reading in my book. And the next one is energy ETF. Okay, here's the energy ETF. And again, this is just kind of like US oil. We're up fighting this resistance that we're getting. I got two lines because here's the high close of this bounce in here in the middle. And then here's the bottom of this gap that we got. Okay, so between those two, that seems to be what this is fighting in here. If it can break through this consolidation, if it can break out, it'll probably close this gap fairly quickly at a minimum and may bounce all the way up to 233. You get a close, so anyway, that's what we're looking for, and we'll see whether the moving averages short and intermediate term are aligned to the high side. We still get the long term down, but it may be trying to do a rally. All right, now let's take a look at Goldman Sachs. All right, Goldman Sachs, this is very interesting because Goldman Sachs, I thought was doing this. I thought was doing this head and then I thought we were going to do shoulders, all right? But when this broke back above here, that kind of canceled that. I mean, it's like it failed. And especially when, got the pullback and the rally again. But, and to me, this kind of failed. Now, you could have even said, well, maybe we're getting a double shoulder, kind of like what you got here. But definitely once this failed, once this broke above, I mean, this whole scenario, was out the window. But that doesn't mean that this thing wasn't trying to top, because I saw the same similar type thing on JP Morgan and Bank of America and, on and on. But right now, the moving averages, you can see, have turned higher. This looks like it's tracking. Yeah, I got a little extreme here and it's pulled back in. It may pull back down here to the 21-day. Who knows? We're not getting divergence, although one thing I have known on Goldman Sachs when I looked at this before, it has pulled down without waiting for divergence before it corrects. So I don't know. Right now, everything looks like it's wanting to push higher and track, and that's, all you can do is assess, how is the price action right now. So there's no reason for me to say, that it's turning unless it starts to break down and close below the 10-day exponential moving average. The next one we'll take a look at is Bank of America, and you'll see what I was talking about here. This may be failing too, but I think it's morphing. Now, it had this real negative broadening top type pattern right here in the middle on the head. And again, you could see what I was talking about here with the head, because I thought we had this, shoulder, and then, of course now it's broadened out. But actually what we may be getting, and let me get rid of this, what we may be getting is another, kind of a consolidation type. You can see it in here, right? And you can see this neckline. And so if this continues to come down, breaks this could be negative. That gets the continuation to keep going down on Bank of America. But again, that's the scenario we're looking for. You see how the 55-day has broken below the 233-day, indicating the long-term trend has turned negative from a moving average perspective. The 21-day is below, so the intermediate is negative, the long-term is negative right now. Short-term is kind of, it just rolled positive, but that's kind of on a very, very short-term basis. So right now, this is the look and what I'm watching for. I'm watching to see if we get down and break this trend line on Bank of America. And JP Morgan Chase. Okay, this again, as I mentioned, I thought we were getting a possible little large head and shoulders in this, but then it failed. It didn't, and it kept coming up here. Now, this looks on a short-term basis like a bull flag, like it wants to then come right out of that, this consolidation, and continue this move type of move that it made right in here. Nice gap in here, strong move to the high side. But I couldn't help but see when I drew the trend line here that it looks a little bit like a broadening type action. And this is a lot of choppy sideways type of action going on here. Okay, not sure what to make of this entire thing. But this in here looks, I'm suspicious that it's a little bit of a broadening top. And boy, I tell you, when you look at it, this red trend line, this red line here, that's the long term from, you know, the post-financial crisis low. And so you can see it came right down to it again, and then got support in here and has pulled up off of it. But it came real close to smashing down through it. I mean, it actually broke it a little bit. And so it could be some topping going on. And maybe we get one more push right up into 65.5. We'll see. And Visa. Yes, Visa. Where are you? Visa Class A. Okay, this one had this big move on Wednesday and, you know, broke this trend line, popped up real big. I think there was news about getting access to China or something to that effect. I think that's what popped this move, because their earnings aren't out yet, I don't believe. I think it's next week. So right now, it looks short-term like the moving average is trying to turn higher. When I look at the indicators, it looks like pause-type action. You know, DI plus is above DI minus. This looks like the inverse fishhook type thing, which usually means like the next move is up, and that's how I read it and look at it anyway. So I think I'm expecting a continuation higher, but honestly, it does look a little bit like it's, you know, chopping sideways here, and it has had one huge move. And so you look at this coming off of down here, this low in when was this? January of 2009, not even March. It turned up before March of 2009. So it looks like 1, 2, big wave, 3, 4, like we're in some kind of fifth and last wave before we get a major correction. The only thing is, I'm not quite sure how to make what I'm seeing, make of what I'm seeing here right now. Other than on a short-term basis, this looks like it's trying to pull. The long-term trend is definitely still higher. Intermediate is negative, but the short-term is now turning higher again, which could pull the intermediate higher. So anyway, I would lean towards the fact that this is trying to resume its uptrend. All right, that's it for today. I will be back tomorrow with trade ideas. We'll take a look at that, and we're going to go back to Sunday trade ideas, release in the late afternoon on Sunday probably, and or evening. And so I guess the last thing I just want to mention, if you're watching this anywhere besides my website, head on over there to the website, check out the post. Definitely check out and opt in for the free training that I've got for you. I think you'll find that interesting. 3 video series. And if you're not a subscriber, subscribe. Gives you access to the Trade Ideas webpage and free PDF I've got for you, the 5 essentials. So, all right, everyone, have a great weekend. We'll talk to you tomorrow.